Okay, good morning, everyone. We are going to get right into the stock market technical analysis. We're going to see what's going on this morning. Today's a very important day, so you're going to want to stay tuned to this video to the end. I'm going to go through all the possible outcomes of what might happen today. Today is Fed Day, so the Fed is going to come out today at 11 o'clock Pacific time, 2 o'clock Eastern time, and they're going to announce their policy updates. Now, it's widely expected right now that the market's expecting that they're going to announce, I believe, a $15 billion per month taper program. So right now, the Federal Reserve is buying $120 billion in bonds, treasury bonds, and mortgage-backed securities, and they're going to announce a tapering of those purchases. We don't exactly. I think likely they'll start out with the mortgage-backed securities a little more heavily than the actual treasury bonds, but that's what they're going to announce. So that is what's expected by the market, and so we want to look at what the outcomes might be if we get any kind of deviation from that, and what the market might do. We're going to start out here with the triple Qs. Now, one thing that I'm noticing across the markets, at least this morning, and take anything that you're seeing, any price action that you're seeing this morning with a grain of salt, because here's the thing. No major institutions are moving money around this morning right before the Fed. They've likely already taken their positions. They've likely already gotten their portfolios. They're managing their portfolios well in advance. And so they're not going to be moving stuff around this morning, scrambling around. Whatever price action you see this morning is likely just going to be some basic algorithmic trading and retail. So what we have right now is triple Qs, which is tech, and it's really on this hourly chart put itself into what looks like a bearish rising wedge. So we've kind of got this short-term bearish rising wedge pattern. We do have negative divergence. That's pretty consistent on the markets right now. There it is right there on the RSI and the PPO. So negative divergence on the hourly chart, bearish rising wedge pattern. We recently broke to an all-time new high. And if you look at the daily chart, it's very common for the markets to break to an all-time new high and then correct. And that's what it's done basically all of this year. You can see, we kind of work our way up to an all-time new high, then have a big correction. Get over the previous high just barely, and then have a correction. This one, you didn't really have a correction. You got it way up here. So it's not completely, going to happen. But the one thing I just want to kind of keep note of is the fact that we're in a bearish rising wedge pattern on the hourly chart. We have negative divergence, and we have the Fed reporting a potential taper. So right now, the market just doesn't seem to care. Tech sector, rising rates is bearish for tech. That's typically how that works, and the market just doesn't seem to care. So the only market that I can see this morning that cares, and this is what I want to point out, is gold. So gold is selling off today pre-Fed. You can see right now it's down $27. This is gold bullion, and we're heading lower basically right before the Fed. But no other markets, as far as I can tell, they don't care. So it's just interesting to see that only gold is the only thing that actually is carrying pre-Fed. So this might be a fake out move. We might see just, kind of algos coming in here, smashing it down this morning. And then after the Fed, gold might turn bullish. All right. It's just a possibility. It's just kind of a hunch that I have, given that gold is the only market that's actually selling off this morning. Nothing else seems to care. Everything else seems to think that the Fed's going to actually come out relatively bullish and dovish. Sorry, relatively dovish. And if the market thought that the Fed was going to come out super hawkish, which is what gold is saying, you'd likely see tech sell off as well. So we have to wait for the Fed announcement to see what's going to happen. One thing that you would want to note, that I do want to note, on the miners, GDX, pretty much coming down into support area right here. So you can see here, this is your bullish falling wedge on GDX. It's been falling. We put in bullish divergence. So oftentimes the way this works is when you get a breakout of a bullish pattern like that, you come in for a correction. And there it is. We've done that so far. So maybe a little bit more down to go, down to this support zone of, we're really getting into the support zone right in here. But we could tag, 3063. I would say that's probably likely the support zone. And then from there, you would look for the buyers to start to step in. So this is an area where I think it makes a lot of sense if we get, just go a little bit lower to step in and take a long position for the next leg higher. And just to point out, Newmont Mining, which is the largest mining company, you can see that we're basically at support right here on the daily. We've been here for the last few days, but right in here is a support zone. And I would expect that likely we're going to hold this area. Now, right after the Fed announces, we don't know what's going to happen. There could be a quick flush and then a recovery. It's usually really volatile right after the Fed. So there would be the possibility that we basically get a quick flush down, dip, make a new low, and then recover. If we make a new low anytime soon, it's going to continue to be a divergent low. So you'll see here on the momentum indicators how I'm trending up in momentum. So any new quick dip down is likely going to be bought up, as that's a divergent low. Momentum's moving higher. We're at support. So from my perspective, it looks like a good area to go long this thing. And that's for the next leg higher, essentially. Same with silver. So you can see silver on the daily chart. You've got this downtrend line, tagged resistance once, twice, 3 times. We finally broke out right here. That breakout came with bullish divergence. So there's the divergence where the momentum's moving higher, and the prices was continuing to move lower. We got a breakout coming in for a back test this morning. So right there. And again, it's kind of a setup that I see. We're hitting support right before the Fed. So I suspect the Fed's going to come out. They're going to talk about a taper, but they're really going to talk it down. They're really going to try to make the market realize that, hey, this is just a small taper. We're not going to hike interest rates, and we are going to be extremely dovish and accommodative in the future. And the market's going to perceive the Fed as dovish, and gold and silver is, as far as I can tell, is likely to rally. So this looks like a support zone right in here. I think we're going to bounce off of this after the Fed. And again, it's not the initial reaction, what happens right when the Fed comes out. It's usually, you got to give it a second to realize what the market's going to do with that information. So we might see a quick little flush down and then a sharp snapback recovery, and then we move higher. So that's what I'm going to be looking for. That's what the chart tells me that it's set up to do. And look, the dollar here today, here's dollar futures, pretty much flat. So that's why it looks very suspicious that gold is, making a move ahead of the Fed, and yet no other markets, tech, the dollar, nothing else is really moving. I suspect it's just a stop raid. They're trying to run a bunch of stops before they rally gold higher. That's my best read on it. So I'm going to leave it here. We've got the Fed coming out. If the Fed does not do any taper, then expect the market to be extremely bullish. If they decide to pull back on their taper or even reduce the size of the taper, maybe they start out really small at $5 billion a month or something like that. If it's a really small taper, then look for the market to be extremely bullish. Look for gold to rally. And if they announce anything beyond just a taper, like a rate hike, then I would look for the market to pretty much get crushed. So be on the lookout for that. If the Fed decides to hike rates or fight inflation a little bit more than expected. Right now, they're really not expected to fight inflation. They're just expected to do a little taper, and that's about it. But if they do decide to hike rates, then the market will likely get crushed. You'll want to, from my opinion, you'll want to get short pretty much anything growth based, tech, triple Qs, large cap tech, small caps. Okay, that's all I have for this morning. So good luck, everyone. And if anything crazy happens after the Fed, I'll put out another video towards the end of the day. Take care.